Yeah, speaking of synchronization, it's been a while since we chatted a bunch of the macro stuff that's been happening on the global stage. And of course, joining us tonight are our partners, starting with Sean White, Australian ecosystem manager and core member for the XDC Network. And stepping in
Yeah,
for
what's up?
Lombe today is Leon Ploubidis. Yeah, Sean, fire it away. And after you, Leon.
That's all right. I was just saying, hey, what's up? And thanks for the introduction, Gene, and thanks for the invitation, Julian, and obviously Luke, all courtesy of Leon of Kasu.
Yeah. Um, Thanks for joining, guys, and great to have you here. Maybe I'll just drop in a quick intro for everyone. Thanks for those that turned up. Apologies for the X technical glitches. We love Elon and X. I do anyway. But anyway, we'll kick on. Um, so it's important for us to be constantly active and also engaging ourselves, our communities, our partners. And I think the education angle's absolutely critical with RWA because it's new. We've been doing it for 6 years. I mean, honestly, like literally, we've been doing it for 6 years. It used to be called security tokens. No one in the industry now even remembers that unless they're old enough and maybe dumb enough to have started a company 6 years before it all started taking off. But on a positive note, here it is now. It's all coming full speed. We've rebranded to RWA, Real World Asset Tokenization, and we have a moment that we've never experienced before. Uh, it's the middle of 2025. The Trump administration came in November last year with a textbook wish list of what anyone in blockchain and digital asset crypto would want from the U.S. government that was missing before. That was one of the reasons they came into power and won the election, and it's been something they've been executing on, I would say, fairly relentlessly since they began. So today, we're welcoming partners from Kasu, from XDC, of course, our team here as well. We're going to talk about lots of things. I think the RWA macro environment, what's happening, what's really happening out there, some real insights from people that spend all day long working in this space. And obviously, there's a lot of people from the communities here that are interested in many things. Some people truly interested in RWA, other people, interested in the utility tokens of the platforms, but really trying to find out what the hell's really going on. And I think that, the landscape that I see, and I live and breathe this all day long, is that we've never ever seen anything like this before. We've never seen the biggest economy by a country mile. I would say the American capital markets are 1,000, 10,000 times bigger than the rest of the world combined. And a lot of that is not just due to size, it's because they print the US dollar out of thin air, and that is the global currency, right? So it's very much connected to the whole discussion here. But what we're seeing right now is the first implementation of clear regulation in the United States of America around stable coins to begin, eventually all of crypto. And the key element that's relevant to everyone here today who's interested in real world asset tokenization is in the recent signed off now in play Genius Act in America, stablecoin legislation, is that this is now a thing, and the U.S. government wants this to grow. They want stablecoins to grow, and the way you buy real asset tokens is with stablecoins. So if the U.S. government says we're going to go from 200 billion to 2 trillion in stablecoins because this helps our economy, our government, our fiat printing business, all those things, then you're going to see 10, 20, 30, 40, 100x volume in RWA. It's just going to happen. Like it's written in law by the Treasury Secretary, the Commerce Secretary, the President of the United States are all shilling this online. That's the key change, and that's really recent. I think it might have been like a week or two. So enough about that for now. I think that lays the landscape for what we're looking at right now is the entire landscape completely changing because the biggest dog in the dog in the park is a 180-degree turnaround on we want to own crypto, we want to own Bitcoin, we want to own RWA, we want US dollar stable coins to be in the trillions, not in the billions. And that lays the groundwork for like what's everyone doing here today? Like why are we here? Why is RWA important? We thought it was important 6 years ago. Some of us 4, 2, 1 year ago. Whenever you got in, now why is it the most important time for the space? So I'll pass it over to the XTC, the Casu guys here to to jump in. I don't think you need to spend too long explaining, exactly what you're doing in the organization, but I think it's just more about like what's most value to me in these X spaces I'm jumping all the time, not just as a speaker, is like what are the real insights? Like what do people working in the industry feel, see, believe, have verified or proved to be true or false, that really helps people listening, like to kind of get a really deep understanding of like why they should be interested, and where the opportunities and what they should be thinking about. So maybe we can kick off and we start with Sean. XDC, one of our partners. We're integrated. We've been involved with. We've got a lot of stuff that we're working on behind closed doors. We can't talk about that publicly because it's not there yet, and institutional stuff's not public till it's public. But XDC dedicated to the RWA space, investing time, energy, resources, people, and I'm sure he's got a lot to say. So, Sean, over to you.
Absolutely, and thanks, Julian, again for having us on today. Obviously, being a tokenizing platform, we have plenty of vested interest in these sorts of conversations. So, again, thanks for bringing us on. Not just a partner, but a friend in Web3. Um, and I think it's probably important to kind of like, maybe just for the listeners as well, just to kind of bring everyone up to speed with the Genius Act. Obviously, there was a major crypto summit, I guess, of sorts, that Donald Trump and his merry men and women rolled out, probably in the middle of last month. And really, it's all about growth via a rules-based system. I think we've had plenty of administrations leading up to this, which probably dashed a lot of hopes, but it marks a shift from a regulation by enforcement approach. It brings in what I would call an innovation within regulation type landscape. So, um, for now, for the first time, there's actually clear rules for companies issuing stablecoins, and that's what the Genius Act was particularly focused on. So, maybe it's important just to kind of bring these to bear. So, we'll just go through the three of them, really, back them. Just need safe reserves, cash or treasuries. Obviously, follow the anti-money laundering and anti-terrorism laws, and protect consumers if the issuer of the stables go bankrupt. So basically, stablecoin holders get first dibs on any of those reserves. So what we're now seeing is, like Julian was sort of alluding to, is with stablecoins, we actually have access to these sorts of tokenized assets. So banks, tech, custodians now have a legal framework to operate. The Act now boosts demand for Web3 networks. So institutions need reliable, scalable blockchains. So that's great for people like XDC. And we also need reliable custodians and stablecoin issuers. So really is a win, really, all around for a lot of Web3. No, that's kind of where I took my lead from what the Genius Act is, but there's basically other aspects. In fact, I was reading on LinkedIn today. One of my colleagues at XDC Network, one of the markets team, um, Ziv Keenan, actually pointed out. It seems that Congress went about to enforce a prescription of standards for payment stablecoin issuers to prompt and promote compatibility and interoperability. And this is something which I think escaped a lot of people's attention. So rather than building regulatory walls, the Act actually anticipates a connected global infrastructure. So basically, compatible international frameworks can now seamlessly interact, or at least that is what's being safeguarded. So it was sort of a triple threat. What we had the effect of flipping DC to become now a crypto capital. And now we've got Web3 rails and stablecoins getting the green light. And then we're seeing all this by the Clarity Act, which was part of that whole crypto sort of convention or crypto sort of party that they had last month. So they actually also pulled through a Clarity Act, which actually bequeathed to the SEC and the CFTC bodies demarcation. And now they're doing this, what was it? I think it was Section 10 of the actual Genius Act is actually bringing in interoperability. So it is a genius move, possibly orchestrated by the stable genius himself. I'm not going to probably go through too much more granular, but I mean, like, there's obviously some really big wins here for DeFi, big wins here for banks in particular to kind of to lean in. All those
Yeah,
ICOs
and
and
just
airdrops and
to
stuff are
yeah,
now being
just
covered.
just to add a bit more color to that. So the simple thing that
Yeah,
I'm trying to simplify for the crew here. The simple
yeah.
reason why the simple value proposition of what's happening right now is
Mm,
that if you go to the broader concept of why crypto was invented in the first place,
mm,
at least one of the DNA was that, we need a new monetary system. We can't just keep printing fiat money out of thin air,
mm,
creating these huge debt cycles, debt bubbles, and we need people to keep buying the debt. Otherwise, it falls
mhm,
apart. So, what's
mm,
happened recently is that so getting Bitcoin as an asset class, what the US government realized 2 years ago, and we know this from being in the networking industry for a long time ago, is
mm,
that the US government, bipartisan, Republican, Democrat, realized that from a lot of lobbying from crypto guys, that the actual point of American global dominance, a key to US global dominance is everyone using US dollars, right? When everyone uses your currency and you print it out of thin air, you're a big winner, right? So what the American government or big chunks of the government thought a couple of years ago was that Bitcoin and crypto is going to reduce their global currency dominance. That's what they were thinking. What they realized a couple of years ago was that actually, if we support USDT, USDC, and US dollar backed stablecoins, we will actually increase our influence around the world. Because if you take someone in Indonesia or Nigeria or whoever, getting $1 bill in cash is quite difficult. You might be able to get like trading whatever you're trading on the street corner, but good luck getting a bank account and good luck getting any volume and good luck sending that anywhere in the world. So, what the US government has finally come to the understanding of two things. First of all, it's way easier for that Nigerian and Indonesian person, and that's just an example, to get their hands on a USDT or USDC than it is to get their hands on a real paper US dollar. And that's the same for the billions of people in the world. So if we actually support this concept, it'll be way easier for these people to get it. That'll make us even stronger, right? So that was the kind of the key dominance. And then what happens then is that they've now come over the top of that and said, if you want to do US dollar stable coins, we're good with it. You must take the money people give you and you must buy US treasuries. So you must buy our whole system. You must invest in our system. So therefore, we now have a system where like logically it makes sense for it makes it's easy for people to understand that like stable coins are like easier to get than dollars, and then the rules that they came out with like last week says we're all about this as long as you buy my treasuries, and then we continue to print this fiat money since like so that's the crazy change that we've got to. And again, when people are printing stable coins, they're either buying crypto or they're buying RWA, and that's the powerful kind of message of the volume that's going to go, what we think is going to get really interesting for now.
I just
Anyway,
wanna I was just gonna say, Julian, do you think it could have ever happened any other way? I mean, like, this seems to be a fairly moderately hybridized approach to transitioning the whole world to Web3. Was it always inevitable?
oh, I mean, was it always inevitable that Wall Street would win?
Well, I
Probably.
don't know if they're gonna win. I don't know if they're gonna win outright, but
Well, now we're seeing on, a lot, even with the on-chain, with the RWA
yeah.
assets, and our company and other friends and partners have tokenized all kinds of stuff. But the actual assets that are really gaining traction, and you can see this on chain, it's all the Wall Street assets, it's the fixed income, treasury tokens, money market tokens. And why is that? Why are they gaining traction? It's because stable coins don't pay any interest. So ironically, or I don't even know what the word is,
Mm.
we've come to a situation where everyone tried to tokenize everything from 2018 to 2022, ourselves are included, startup shares, real estate shares, VC shares, but the liquidity was always very low because they're private assets. And then
Mm,
sometime about 2 years ago, the crypto hedge funds, the biggest stable coin holders, because let's we love the degens, but they're not big stable coin holders, right? So
mm,
what happened was $150 billion of stable coins earning 0% interest because Tether and Circle went out and said we can't issue interest because that would be called a security. So we need to actually developed this stable coin thing with no interest, which lucky for them that ended up becoming the most profitable businesses in the world. But we ended up as a different discussion, but we ended up
Mm,
coming to say to the point of what do we do with all the people sitting in stable coins when they're not in crypto because the market's down or sideways or they don't want to bet? So then people went, oh, let's tokenize treasuries, 5%, 6%, whatever. Who wants a real yield? And we know now from our joint ventures with crypto exchanges and fintechs, all the crypto exchanges want these assets because they're the complete opposite, or at least they're the best balance to crypto. So what's the best balance to altcoins and crazy crypto? It's US dollar backed treasury tokens guaranteeing you 4%, right, on a
mm,
stable coin. So that's, yeah. So do I want them to win? No. Are they
yeah,
winning? Sort of.
yeah. That's what I thought.
Yeah, it is. But look, let's jump across to
I,
Leon, and Luke's here. Luke's made it back from his MRI. Hopefully your brain is still intact, Luke. But I'll
yeah,
pass to you guys.
they're imaging it to check if it was there. Apparently it is, so I'm safe. But yeah, no, thanks, Jules. Um, and I'll hand over to Leon in just a minute. But you've just said a couple of things that I was that I think you just totally nailed, Jules. And I think stripping things back to basics so people can understand why this is all important is key. Who remembers Ripple back when it had a purpose? At least it thought it had its purpose, right? The whole point of Ripple was to be this interbank transfer mechanism to save people having to use Swift and to use the typical banking rails that take time, cost money, slow, bureaucratic, all of the stuff that TradFi is known for. Obviously, Ripple, and I apologize to any Ripple maxis out there, but Ripple's totally pointless, and I'm sure many of you know that. But because it's volatile, right? You can't have an asset, or you can't have a medium of exchange that's constantly changing in price. It just sort of defeats the purpose. And then stable coins came into the mix and solved that problem. And that's kind of like the killer app for crypto in one respect. There's obviously a few of those killer apps, but stablecoins have this incredible purpose whereby they're fixed to the value of the US dollar in most cases or other denominations. And you can move them around pretty easily. But there's been this resistance, regulatory resistance with these stablecoins for some time now, and this Genius Act just turns that on its head. I mean, you've got USDT with problems with Europe, for example. And there's always questions about how backed was it and when it depegged and other issues like that in the past. Now that we have this framework in place, which makes it abundantly clear exactly how stablecoins need to be handled and dealt with, and to your point, Jules, which I think was bang on, it's now providing everyone with access to US dollars, well, will be around the world, and a lot of countries, we're dealing in USD anyway, but this digital US dollar, it's providing access to these digital dollars in a way that previously hasn't and won't, wasn't really possible. And I think that this provides the demand mechanisms that the US government wants. That is going to, reinforce the US dollar's position as being that reserve currency, but not just the reserve currency for the world, but for the internet. So the USD becomes the internet's reserve currency, which is an important place for them to play. So it's a pretty smart move, and a little bit ballsy to call it genius, but it was a pretty smart move by them to go ahead and do this. And I think everyone's been very happy with the way that general regulations have been tracking, particularly with the lead of the US since Trump's come in. And I certainly hope we have similar kind of epiphanies in Australia, where I am. But it's an exciting time. It really is, Jules. And I think you summarised it neatly before. But stable coins are going to just grow in volume and in use exponentially over the coming years. And then I guess it leads you to the next part. Like, then what can we do with those stable coins, and how can we better utilize them and extract their real utility?
Yes, all true words there. Um, yeah. Okay, Gene, I'll pass it back to you. You know you were dealing with the technical difficulties, but you're much better at running these things. Let me know when I need to chime back in.
Yeah, all right. Thanks for taking over, Julian, and nice to have you on here, Luke. Yeah, so I think we've kind of covered what the Genius Act was. Thanks for that, Sean. And I think everyone here is focused on RWA. It seems to be one of the core themes as well, aside from the macro topics that we will be discussing. But this is an open question to all of you, gentlemen. Feel free to answer, and you can also chime in. But the question here is, as RWA focused platforms, where are you guys seeing the most demand for tokenized yield products? Are they like focused on treasuries, private credit? And the second question is, what drives that institutional interest today?
Let's
Um,
get Leon into this.
yeah, sure. Thank you, guys. um, Look, I think the institutional interest comes from the need to deploy capital. A lot of credit funds and asset managers are having a hole in their pocket being burned from seeing all this capital that needs to generate yield. Um, On-chain assets seems to be a new direction, a new asset class, that open up a whole new opportunity to deploy. And when you're talking about private credit, there's more unique opportunities that aren't necessarily available, like in public listed markets have, with the likes of treasuries and those types of investments. So look, institutional asset managers looking for unique places to deploy. Private credit is very unique. There are different types of businesses out there that require capital for different purposes. The SME segment in itself is extremely diverse. And I guess the hunt for the most risk optimized private credit is key. It's like the holy grail of private credit. Where can you get the highest yield for the lowest level of given risk for every percentage point of yield? So institutional asset managers are looking for unique private credit opportunities to really optimize the risk reward outcomes, as opposed to, I guess, the homogenous products of your US treasuries, where they're all very much similar. Anyone can access them, whether they're accessed in tokenized form or in traditional form. They pay similar sort of yields. They're not overly exciting. So that's where I see a lot of direction and interest in access of tokenized assets, more so in the private credit space, and that's where Kasu is playing.
Maybe it's worth just explaining why. And I can add a little bit of background to that, because the private credit space is enormous. It's like $3.2 trillion. And very quickly, it's like, how do we get here? If you go back to the GFC back in 2008, obviously we had a lot of subprime lending happening there, which unwound when the housing market wasn't doing so well in the States. We've all seen The Big Short, and I'm sure people have read enough about that to understand what happened there. But what this essentially led to is these banks going risk off with lending, and really just wanting vanilla, buttoned up opportunities that weren't going to expose them to similar kind of issues. And so the ability for any business, any firm to access credit and traditional institutional credit became difficult. Fast forward until COVID, the industry slowly grew from 2008 to sort of 2020-ish, thereabouts. And we see it sort of approaching the sort of $1 trillion mark, or even a bit more than that. And then with COVID, what happened then? I mean, everyone just went into money printing frenzy. All the economy slowed down. All of the governments realized what they needed to do is to try and print their way out of it, and that's why we're all suffering from ridiculous inflation the world over. Housing prices through the roof, everything through the roof, just because of that uh, terrible economic management. And because of this, obviously, you can't leave your money in a bank because it's just getting wasted away. So people are looking for other opportunities. They're looking for higher yield opportunities, and that's where private credit sort of comes to the fore. It's a bit more risk on, but also provides the kind of yields that are able to really outpace inflation and give you the kind of returns that you want. And so we've seen the private credit space hit about 3.5 or $3.2 trillion in sort of more recent assessments and measures. And so, to Leon's point, you have these massive funds from Goldman Sachs all the way down that have huge reserves of cash that they need to deploy. And while 4 or 5% in treasury bonds is probably okay for some, it's not a lot. It's not okay for a lot of others. And so they're really looking to deploy that. And I think that that's why they see the big opportunity with private credit. But to the flip side of that is looking at TVL right now. It's not in private credit in crypto. It's in T-bills, it's in Ondo, it's in Maple. You look at Maple that have had exponential growth since Syrup's come online, and they've got what, $2 billion, I think, TVL under management. Ondo, significant
But
TVL as well.
yeah, and let me just chime in on that one because that's a good point. So what Luke is stating is the reality, and Maple. I think Maple is one of the most creditable companies in the space. I know the guys; they actually are fellow Aussies. That's not the point. The point is that I think that especially in their last products that they've offered, they've brought let's call it BTC Fi, so Bitcoin Fi, Bitcoin Fi.
I think we lost Jules. Went into listener mode. A few technical issues.
I think I
Not
was
not
Ondo.
not the first time someone said the trigger word. um, yeah, I think what Jules was about to get at was BTC Fi, and that is the ability to extract yields from Bitcoin. Which I don't want to steal Jules's thunder because that's exactly what IXSwap is doing and starting to focus on now. So I'm gonna leave that topic alone for a minute so he can come back to it. But I mean, that's the other thing. It's obviously when you've got an asset like Bitcoin, for example, and it's not for a lot of people, it's not a highly liquid asset. It's a buy and hold policy. If you're holding on to it, what can you do with it? It's like you've got a house. It's an illiquid or that's an illiquid asset. But you've got an asset. You're sitting there, you're holding on to it. How can I extract more yield from it for the house? Rent it out, get something from that. With Bitcoin, there's similar opportunities that are emerging now where that Bitcoin can essentially get on lent or used as collateral. But again, I don't want to steal Jules's thunder, but he's disappeared. So,
If in
Gene, are
doubt,
you
hand it
around?
back to Gene.
Yeah, I guess while we're waiting for Julian to come back, any points that you want to add on to that, Sean, before I jump on into the next question here?
Look, I think most of the things I'm seeing aren't really that end of the industry, to be honest. So I think it's probably best
Can,
answered actually already.
can I maybe I'll add something to that, Gene? And I think because the question was, what's more interesting right now in the market? Is it private credit? Is it T-bills? Like, where are people voting with their dollars? And the reality is they're voting with T-bills. Why is that? Well, because it's a safe, secure yield. You're getting your 4 or 5% thereabouts. It's not high, but it's better than nothing. But it's highly liquid as well. So you can drop it in one day, pull it out the next, which is of huge value. With private credit, most of the people that are being these funds are being lent to, it's real RWA funds are going off chain. You deposit to a platform like Kasu, for example, or others. You will deposit your funds in, it'll get converted to fiat. That fiat then gets deployed in the real world with these different businesses. They use it for what purposes they need. They generate the yield, and that yield gets paid back. But sometimes the ability to get your money out can be restricted. And so I think that's a real gating factor with private credit, which we do have some ways around that, which we can talk about later. But that's certainly why the appeal is there with T-bills, because with Ondo and Maple and these other options, you can be in and out in hours if you wanted to. It's a great way to park your stables temporarily while you're figuring out what the market's doing and whether you're going to buy a dip or do whatever else you want to do with the money. Where I think things are going to change though is when the market turns. No one knows how long this market's going to run for. I saw an article today. I believe it was from Scott Melker actually, who was talking about the length of the cycles over the last 3 cycles, and there's around 1,000 odd days, roughly, give or take 100, from during the bulls before things start, the wheels start falling off, and we're approaching that point. I think by his estimation, about October. Going historically, but there's obviously a lot of other factors at play here, the institutional money and everything else. So this bull could go for a lot longer. But to the point is that it will end at some point, and when it does, and Bitcoin's had its run. Maybe it hits 150, maybe it hits 200, maybe it doesn't. Who knows? But when it starts to retreat, and it will, and all the majors do, and all the other shit coins, part of my language, start to go backwards at a rate of knots as well. People are going to be piling out of those and into stables, and when they're in stables, they're going to be looking for an opportunity to earn a yield. And will they be going into T-bills, or will they be going into something like private credit or other options that are providing a higher yield? My argument would be that they probably won't be going into T-bills because over the coming months, the interest rates are going to be falling as well. We're looking at almost a full percentage point coming back in Australia over the coming sort of 6 months or so, and certainly in the States. Jerome Powell's on his way out sometime early next year, but over the next 12 months, I can imagine that interest rates are going to be coming backwards in most places, and as they do, so are those yields on T-bills, and no one wants to be parking their money getting 2%. So I think that's when private credit is going to come to the fore.
100%.
I feel like you just dropped a lot of information there, Luke, and that's pretty interesting. So basically, what you're trying to say right now that the interest will be coming back into tokenized yield products after we've seen BTC kind of retreat. So you're basically saying that the RWA market will have its bounce back when that happens.
Yeah, actually, I'm just saying that I think all of RWA will be fine and golden. Certain aspects of the RWA market will probably perform better than others. And yeah, let's just leave it at that. Have we lost Jules? And totally, he's gone, hasn't he? Oh well.
Yeah. I think we've lost Jules for a while, but thanks for that. I think I'll jump into the next question.
Okay.
Okay, cool. I guess this is directed to both Kasu and XDC. I think Sean, you touched upon this earlier when you were talking about the Genius Act, and you were talking about how it's a win for interoperability. But I guess for everyone that's listening in right now, how does that exactly spell? For your everyday investor, like how does involving regulation in the U.S., Asia, and Europe affect the ability of protocols like yourselves,
Yep,
and
sure.
how does that help scale tokenized RWAs?
I think it might have been Luke who mentioned it earlier, or it might have been actually Julian, but the US market is absolutely immense. I think it was actually Julian in his introductory. He was basically saying it really does dwarf all the other economies combined. But so when we have a strong American economy, that Genius Act, or actually that interoperability safe measure, is going to be basically placing America in a really sweet spot because it's going to be investing a lot of its time, energy, and resources into ensure that it can interoperate with places like Dubai, ADGM, Singapore, Hong Kong, Switzerland, all the first movers, I guess. So the kind of safeguarding that whole digital channel corridors. So I think that's probably like a really important point to make. The pathways, I guess, of regulation. Just speaking, I guess, specifically about XDC's utility in trade and trade finance, there's a very strong sentiment sweeping through. I think maybe three-quarters of the G7 at the moment have already adopted a very key piece of legislation that allows tokenization of titles of goods, so bills of lading and those sorts of things. And we've seen JPM and Lloyd's get together with some very good um, platforms, which basically have been showing promissory notes and letters of credit and even bills of lading coming into play here. So that allows basically deeds and goods to be carried across international borders and it to be tokenized on chain. So that means we can, with XDC, we've been put a lot of effort into making sure our network and our partners are very good with tokenizing and keeping things nice and secure and regulatory compliant to then also do payments and also trade financing. We've got trillions of dollars in unmet, underserved trade financing that can be probably expected. Up to 5 trillion is the number that's been floating around, bringing in sort of those who haven't been serviced by perhaps through weak financial systems or so basically already on top of what is being financed to go tokenized, we've just added an extra 5 trillion on top of that globally. So that's a regulation of another sort, and Australia is looking at that piece of legislation right now. UK passed it about 18 months ago. So that's called the Model Law of Electronic Transferable Records. So there's different regulations going on to sort of suit Web3. Obviously, that's going to be a big one for markets. And then, like Leon was saying before, we're going to have lots of private debt being tokenized, and then we'll be able to sort of then allow, through that fractionalization process, that build love blockchain for. We're going to be able to allow that sort of democratization and access to, bringing more keys to yield in ordinary people, or at least, fairly sort of slimmed down sort of entry points like Kasu will probably be bringing on very soon. So, there is going to be some really interesting new types of private debt that sort of start to really take off. And I think Kasu are the sorts of platforms that are really positioning themselves to take advantage of that.
Thanks, Sean.
There's 18 decimals for a reason, right? So basically, to answer your question, Gene, everything's going to go boom, and those 18 decimal places will get used.
Yeah, I could agree more. Sorry, Leon, I think you were going to say something.
Yeah, I was just going to add on, I guess, the private credit space, which Sean was leading into. So thanks for painting the picture there, Sean. It's a good segue into how Kasu sees the regulatory landscape and global RWA expansion. I kind of see it in a way that the Bitcoin ETFs created, regulatory compliant way for institutional investors to deploy into Bitcoin. That kind of effect and the capital flows experienced from that sea change in the market. Similar to, I see Genius and Mika will be doing the same for RWA, through which stablecoins are the rails. So it legitimizes the access to RWA assets on chain for institutions and family offices in a similar way that the Bitcoin ETFs did for institutional investors. So I think that is the catalyst, particularly Genius, because US dollar stablecoin will be the dominant one over a lot of other activity in Europe. So having that legislation around the use of stablecoins as firstly a payment rail, and then secondly, that payment rail having embedded financing options. And that's essentially what Kasu is. It's allowing the use of stablecoin payment rails for anyone in the world to get in. But then once they're in stables, we can then deploy them into originating loans, whether it's in stables or fiat, like Luke said, how we off ramp to fiat, being able to do that quite seamlessly. And it just allows institutional investors that have to follow regulatory guidelines to now play. Now that they can play, the larger family offices can too. You also see this superannuation funds that then slowly start moving towards where that regulatory flow is now gaining adoption in as well. So, just to summarize what Bitcoin ETFs did for institutional investors, Genius is doing for any stablecoin orientated investments, which is RWA, basically. So massive changes I see happening in the space because of that.
All right, that was a really great analogy, actually. On that put everything into perspective, what you just said there. Hey, Julian, I'm not sure if you wanted to chime in if you heard the question so far, but I can repeat it for you if you wanted to give your 2 cents.
Yeah, sorry, got cut out. I was jamming to myself for a while. What do you got, Jim? What do you got?
All right. We were just discussing about how this whole genius stack and just the whole regulatory clarity around the world could be setting the stage, and how that affects kind of you know um, global regulations worldwide. U.S., Asia, and Europe.
Yeah,
And how does that affect scaling tokenized RWAs?
yeah. No, it's a good question. The US is the dominant market globally. It remains that way from a capital perspective, from a mindset perspective. Um, Unfortunately, to our friends in Europe, I think they're going massively backwards. So they are the only ones left, if you're not back in China and Russia and that side of things. So politics aside, what it means now is that um, crypto and RWA have been hustling and growing around the world since it began because it makes sense. And even in the US, the past Biden administration, which had an actual policy to kill crypto, choke point 2.0, no bank accounts, shut stuff down, Silicon Valley Bank, SEC attacks on everyone with no actual clarity. So but the point that I'm trying to make is that the crypto and RWA survived and grew, right? And that was when the biggest, most important person in the room was trying to kill it. So what happens now is that the biggest, most important person in the room wants to own it and dominate it. Right? So it's a 180 degree. I like to say it's like a 570 or whatever a couple of 180s is, but it's a 180-degree turnaround. It's it's hard to explain the importance of that if you turned up recently, right? But for those in the industry, it's just like everyone wants to go to America. If other countries, Singapore, Bahamas, at least from our front, right, were still looking at this years ago and went, this makes sense, let's make some regulation, let's grow. Meanwhile, the US is trying to kill it. If the US now says we're on, it's game on, then everyone around the world is much more confident getting involved, right? So those that were already in are like, okay, well, that's a nice relief that they're in too. Let's get more. Those that might have been lukewarm or anti are like, oh, well, they're doing it, we should do it as well. So it's hard to kind of explain the importance of it, right? And again, it's like MicroStrategy 2 days ago announcing, I think, the most insane earnings report that Wall Street's ever heard, and the stock goes down 6%. There's a massive. It's a big world. There's a lot going on. Everyone's busy. There's a lot of misunderstandings, and at least for this one, which is literally a week or two old, and that's why the people joining this X spaces are definitely ahead of the curve. We got like 100, 200,000 people, whatever, with 9 billion people don't know what we're talking about right now. This is just monumental. So it's a shift that is going to create enormous volume, like enormous volume. It's a like a yellow jersey, first in the Tour de France. Like America's like gone from the back of the pack to the front of the pack and saying, we're going for it, everyone follow us. And they've got all the money. And it's hard to explain how big it is, but it's just massive.
All I can say, Jules, is thank God or thank Allah or thank Buddha or thank whoever your deity is for Trump. Um, Coming in, love him or hate him, whatever your political position is in terms of crypto is concerned, I'm just thankful that we didn't have the Democrats and the continuation of choke point, Elizabeth Warren, and all of that that hell-bent agenda that was trying to shut it all down. I'm just glad we didn't have to deal with that. And I really hope this sends a signal to the rest of the world and the regulators in other markets as well. Most of you probably tell by my accent, I'm Australian. Kasu is Australian, technically, although, Caymans were all offshore somewhere. But we are Australian, and it all comes back to me here. It's been a nightmare, an absolute nightmare dealing with the regulators, trying to make sure that we're operating in a compliant manner. And we are. so so just so
Yeah.
everyone knows, we are compliant, but it hasn't been easy. It really hasn't been easy because there are just so many walls up and restrictions up that just make it that much harder. It's in the same way, like the old, you need to be a sophisticated or an accredited investor in order to invest into this particular product, this security, whatever it might be. It's like, why are they deliberately just trying to, in their eyes, or their explanation, trying to protect those people that don't have $200,000 a year in income and $1 million in assets, or whatever the criteria is. Oh, they're trying to protect us. They're trying to make sure that we don't get scammed by the bad actors. And yes, there are a lot out there, but at the same time, they need to just kind of let it go and let this puppy run, because it's going to, and it's going to be exciting when it does.
All right, thanks for that, Luke. Thanks for that, guys. I feel like there was a bunch of keywords that you just mentioned there. So I'm going to throw this next question at you, Luke, since you kind of already opened up the topic here. You mentioned regulatory clarity, the institutional interest in stable coins, and a bunch of foundational infrastructure required to take RWAs into the next step. With that being said, we're all focused on building RWAs and infrastructure. What do you think is the fundamentals that an RWA platform needs right now to capture that institutional interest that we're seeing?
Okay. Well, to my last point, you got to be compliant because the institutions won't touch you if you're not. So you have to be acting compliantly, and obviously that means whichever jurisdiction you're engaged in, that you're playing by the rules. So that's a given. And I think having a strong team with a strong product and a strong solution. I mean, it's the same thing that anyone investing into anything would look at. They want to look at the fundamentals and they want to understand how secure, how safe is what they're putting their money into. I guess the thing with RWA, which is probably a good thing, frankly, is in true RWA, money goes off chain and it is not sitting on chain. Like, so you're not rehypothecating DeFi, for example. You're not saying, hey, give us your money and we're going to go put it into Aave and something else. And we might have a bit of T-bills. There's some people obviously that are doing that. But true RWA, your funds go off chain. So you're kind of reducing some of your attack vectors, in so much that the volatility with the crypto space, the fact that you could get hacked, the exploits that have happened historically, that's always an issue, particularly for institutional. I mean, the idea of them just leaving millions upon millions of dollars sitting on chain, ready for some creative hacker to come along and just drain it all, is a problem. And so I think that's something that we as Kasu, and I'm sure plenty of other firms can say as well, you put your money into Kasu, it gets converted into fiat, it's off chain. Like the attack vector is very small. So that's, I think that's something that people probably need to pay a little bit of attention to. But yeah, look, you just got to assess on the fundamentals. Like, where's the yield coming from? If it is reasonably solid yields, there's always that correlation, that relationship with risk. The higher the yield, the higher the risk. So how can you find those asymmetric plays whereby you are getting a strong return, but you're managing your downside? And I think there are some opportunities that are emerging out there that are probably worth looking at.
All right, interesting points there. I feel like it just begs to question, like, as long as they are what it is the RWA name is, which is real world assets. I guess anyone else from the panel or you gentlemen that want to add on to that before I jump into the next question here.
I'm good, G.
Okay, it looks like we're hitting that 1 hour mark, and we do have at least one more question, and of course, the closing remarks here. I feel like we've been talking about the grand scale and where everything has been going and where it will lead into. So, a question for everyone here, and any of you could start and answer this. So, the next question is, over the next 2 to 3 years, what developments, whether technical, regulatory, or market-driven, you think will have the most potential to accelerate the growth of tokenized RWAs?
I might just jump in, and this is actually a cautionary note. Actually, now that Luke's brought the vibe down with his hacking, so but fraud's always been a major risk in financial services, and it could even become a bigger one with our RWA tokenization. We're thinking of like AI, and it wouldn't be a space if we didn't mention AI. So just got to get Elon Musk's sort of AI sort of in there. But like AI can generate any content, right? So there's providers addressing this issue, like mimicry risks and things like that. I mean, they'll help grow the market despite those challenges. But aside from that, I guess macro trends. The Economist just featured Trump's embrace of all this, and then they cited Andrew Bailey, who's the governor of the Bank of England. Um, Bailey went on to warn commercial banks against issuing their own coins. So, I mean, there's going to be some push and pull there, I think, in the macro. Obviously, Christine Lagarde is always very quotable on that as well. But essentially, USA's got this glass half full as opposed to a glass half empty. And I think it's probably been mentioned before that Europe and some of the other, Australia perhaps would be fitting that, probably seeing things a little bit more protected rather than seeing growth through regulation. So there are sort of my more sort of downer moments there. But TradFi, DeFi, those sort of categories tend to get a bit blurred now. So JPM, some of the big players have been putting hundreds and hundreds of millions into blockchain deals in the last few years. So yeah, stablecoin volumes probably running at what, a trillion, half a trillion USD each month. So yeah, there's plenty to be optimistic about. But yeah, just thought I'd bring in some of the black hat thinking.
I'll tell you why I'm optimistic, Sean.
Mm.
It's because of the self-interest of the powers that be. I'm just going to call it as it is. Trump
Mm.
is always going to make sure that he's taking care of himself, no matter what's going on here.
Mhm.
Like whatever your thoughts are of the Trump coin, that meme coin that was launched. Many of you are probably familiar with. This is just slightly tangential, but I think also important. Many of you have probably heard of World Liberty, the
Mm.
the World Liberty Fund
Eric
coin.
Trump?
Yeah, well, it's all of the Trumps, but it's actually a couple of guys, Zach Falkman and Chase Hero, who were selling Chinese hair extensions, drop shipping a few years ago, managed to crack into the crypto game pretty quickly by meeting Trump on the golf course, I believe. Look, anyway, I'm not questioning their capabilities or their experience in the space. Just what I would probably question is the utility of the World Liberty token. I think they sold 20% of the supply. It's a governance token, so even if one person spent the $2 billion to buy the entire 20% of the supply, you are
I
not
thought
governing
this
anything.
I thought this was meant to be
You
is
got
this you
20% of the vote.
optimistic? Is this you being optimistic?
No,
Okay.
I don't think many people are paying a lot of attention to that. But what they are doing, which is interesting, is USD1. So this is the new stable coin that I'm hearing some rumors about, which are going to be pretty interesting. So
Mm.
keep your eyes open on USD1
Mhm.
from World Liberty. You go search it and Google it. They've updated their website
Is that a
to
challenge
reflect.
challenger
No,
challenger to
no, no.
Ubix?
I just think, and you said Eric Trump before. It's the Trumps get 75% of the revenue from World Liberty,
Mm.
and the two guys that set it up get 25%.
Mm.
That was at least in their earlier docs. In terms of USD1, I believe they're leveraging a lot of the White House connections and info to make sure that this gets a lot of attention from some
Mm.
interesting players globally. So look, when you've got people with self-interest like that at play, and the Genius Act just happens to get passed, and USD1 is perfectly primed to benefit from that,
Got
then
it.
I think the flow-on effect for everyone is probably pretty positive.
I hear you.
I might add something about my thoughts on the future of tokenized assets, and I really see the most utility coming through the potential liquidity in unlisted assets. As we all know at the moment, you invest in a private company. Good luck getting your money back within the next 10 years. Think of the venture capital model. It's what 5 to 10 year exit before they make a return on their capital.
Typical
Private equity
typical
as well.
VC fund is 15 to 17 years.
Okay, there we go. A lot longer than the ones I've seen lately. So, very true. And also on the debt side, private credit as well. What we were talking about early. If it's not tokenized, if it's not treasuries or T bills or whatever, if you lend to a company, a private company, it's not like you can just go on a digital market and then on sell that debt to someone else, take it over from you. But with RWA and blockchain, then you're tokenizing these assets and you're able to gain instant liquidity. So I know Julian's done a lot of really innovative stuff in the past at IXSwap in terms of crowdfunding for startups and private companies. Secondary markets have always been a problem, being able to sell that interest if it's not listed. IXSwap did some really cool things there. It's a problem that exists in the traditional crowdsourced equity funding model at the moment. There's really early stage ideas. Yeah, like Julian said, 15 plus years for venture capital exit. Well, what about these just idea phase businesses that aren't even there yet for venture capital? They're getting investment from the crowd. It's going to be longer than 15 years if they even survive past the first couple of years. But I guess the whole point is that RWAs allow liquidity in a real fluid way. The challenges, though, it's still going to be compliance and licensing, because once you start enabling the trading of those assets to other people in liquid markets, there are securities legislative issues that you're dealing with. But maybe that's a good segue into some of the stuff Julian's seen in that space as well. And if you, Julian, see that still as the future of RWA when the market's ready for it.
All
For
right.
Julian,
Yeah.
Yeah. Well, yeah, yeah. I'm going to wrap it up in a few minutes. I got to jump to another call. So, like, what I think is important for everyone to take away, spending my life and money and time and energy and minutes on this life dedicated to space, like, look, it's it's finally coming, right, for the RWA space. We've had, and for those that there needs to be, there's a difference between securitized tokenizing treasuries, BUIDL, $3 billion. I mean, that's a thing, right? That's a real world asset token. You put US dollars in, you get shares of this treasury token. That's a real world asset token. There's a difference between that and utility tokens of RWA platforms, right? So, and what does that mean? Even IXS, right? IXS token of our platform. That's not a real world asset token. It's the platform token. It's our BNB. It's our uni token of our business, and we're driving utility towards it and value. But it's a cryptocurrency, right? And it's the same for Ondo token, right? Ondo token that you can buy on a DEX or on Binance is not a real world asset token. It's a cryptocurrency. It's the platform token of the Ondo platform. So it's important for me to kind of constantly reiterate this issue or this fact, because a lot of the people coming in the space, they hear the word RWA, they think this is great, makes sense. I want to invest in this space. But are you investing into an equity or treasury token? Is that what you want? I don't think many people want that. I mean, I don't think anyone on this spaces wants that. Or you're investing into a cryptocurrency that's the core token, the native token of a platform that is facilitating key infrastructure for the real world asset industry, right? So there's been, a lot of protocols, and there's been a lot of like bad actors. Let's just say, I don't want to pick on protocols that are doing their best to convince people that the RWA industry is solely reliant on whatever they do for exist. But when you really take, if you really care, if you take the time to understand what real world asset tokenization is, if I can simplify it, it's the tokenization, it's putting equity and debt, it's putting shares, it's putting value of real world assets, whether that's a share of a company or a share of a fund or a loan of something to whoever, into a tokenized format on chain, so it can be more transparent, utilized in multiple different ways, collateralization, lending, etc., or it's just a better system, full stop, right? So what it means is that people need to understand the difference. And when you think about tokenizing anything, let's just take a tokenization of a private credit. So let's say a company that Kasu knows, is, let's bring the companies in on this chapter event. A company that Kasu knows wants to borrow money as a private credit token at 12% for 12 months, and they're willing to give XYZ for it. So that token could be issued by IXS. It could be issued on the XDC protocol. So you've now got, like, here's three synergistic companies here facilitating this actual transaction, not just yelling and screaming on Twitter about why we need price to go up, but an actual issuance of a real world asset token from the legal compliant position of where we sit, where we issue, we do the KYC, we issue on a protocol that's legitimate, XDC, to an asset owner or issuer, which is Kasu or the Kasu partners. And now we have the actual full circle, legitimate, realistic, deliverable of what the hell RWA really is. Okay, that's what it really is, right? That's the start to finish of an investor buying an RWA token, and then the reverse would be, Kasu's clients finishing the 12-month term, giving back $112 because they borrowed $100, right? In through stable coins and tokens. The investors getting their $12 interest, everyone getting their money back. XDC continues on because they're the protocol, IXS continues on because we facilitate the trade, and Kasu generates a new loan tomorrow, right? That's how it works. So that's what I think is really important. So if you're interested, because everyone wants to make money. I mean, I don't know many people that don't want to make money, but if you want to make money, you think about this. If you're going to buy cryptocurrencies that are RWA related, are you buying them from fluffy projects that just talk a lot of crap and you know end up being a big rug pull or whatever the hell they are? Or is there actual real business here? Do you really understand what's required? Because you can't just you need this partnership, right? You need asset issuers and asset owners and specialists like Kasu. You need protocols and you need licensed infrastructure. Without any of that, the whole thing's a complete waste of time and everything's just, it doesn't make any sense, right? So I'll just leave you with that. Um, that's what you need to understand. That's why we brought these people here today to educate you guys. And hopefully you join all the communities and follow all of them. And the last thing I'd say, everyone needs to buy more IXS. That's it. Thanks, Gene.
All right. Speaking of full circle, it looks like we're finally reaching full circle on this session. So I guess closing remarks from each of you gentlemen. We can leave it at a sentence.
They were remarks, so I'll let the other guys finish.
Okay.
It was nice of you to close the loop, Julian. It was very, very nicely put. Who wants to jump in first on the closing remarks?
Yeah, sure. I'll just echo Julian's thoughts. Go and buy IXS. Casu's not on market yet. We haven't launched it, so I can't shield my own product. But definitely fill your bags with IXS, guys.
Is that all you got to say?
Yeah, that's it.
All right. Is Leon still with us?
Yes. No, I think the closing remarks I had earlier about the future of RWA bringing liquidity and I guess echoing some of Julian's assertions around know what you're buying and understand the difference between utility token and what it actually does and how it helps you improve your experience with the protocol you're interacting with versus a security like token, which is just an ownership of something or a cash flow stream of something. So I think that's all been pretty well covered. So thank you for having me.
I wanted to leave myself to last because my closing remarks is something I didn't get to say earlier, or it wasn't really relevant. But when I was digging into some of the policy weeks, the stuff that happened, and this is a bit of a departure from what we've been talking about, but maybe it's best to kind of, this could be a space in its own right. But Tom Emmer addressed the rising concerns of financial surveillance, and they really started debating this, and they actually passed a anti-CBDC surveillance state act. So that's I know that's something, if I mentioned earlier, probably would have just blown up the whole spaces. But God bless America. The government controlled programmable currency doesn't really jibe well with a lot of us in Web3. But my closing remarks is there's a lot more going on underneath the hood with this Trump administration, and I'm a bit like Luke. I'm kind of like keen to see where this goes. So maybe let's talk some other time. Thanks for having me.
Okay, thanks, Shine. That definitely sounds like an interesting topic. So instead of being closing remarks, I think we might look forward to another session. If everybody's
My opening remarks.
Yeah. Okay. I guess, well, that wraps it up for today's session. I just want to say thank you again to XDC Network and Kasu Finance, and of course, Julian Kwan for joining us today. Stay tuned and make sure to follow our partners' protocols, and we'll leave it there. Thanks, guys.
Thanks, Gene. Thanks, guys.
Thanks, everyone.
Easy.
It's been
Bye-bye.
fun. Thanks.
Bye.